The global debt, according to a recent report by the Institute for International Finance, amounted to nearly $300 trillion in 2021, equal to 356% of global GDP. This extraordinary high debt level represented a 30% point rise in global debt to GDP ratio in past 5 years. The modern monetary theory teaches that there are no spending constraints on a government that is monetarily sovereign. Sovereignty by this means that one that produces its own credible fiat currency. And such a government can spend an unlimited amount without worrying about the consequences until there is a surge of inflation. But this modern monetary theory is deeply flawed. It promotes debt-based economy. After the US President Richard Nixon, the US economy shifted towards a more debt-based model. In 1971, President Nixon ended the convertibility of the US dollar to gold, which effectively abandoned the gold standard and allowed the US Federal Reserve to print more money to stimulate the economy. This move by Richard Nixon came to be known as the Nixon shock, and it led to a period of inflation as the increased money supply led to a decrease in the value of the dollar. In order to combat inflation, the Federal Reserve raised interest rates, which slowed economic growth and led to a recession in the early 1970s. Now again, in response to move the economy out of recession, President Nixon and subsequent presidents pursued expansionary monetary and fiscal policies to stimulate economic growth, including implementing large-scale government spending programs and cutting taxes. This approach was successful in terms of stimulating economic growth, but it also led to a significant increase in government debt. Over the next years, the US government has continued to rely on debt to fund its spending and stimulate economic growth, which has led to a steady increase in the national debt. It's important to note that this approach is not unique to the US, and other countries also have a debt-based economy and have similar challenges with the management of debt and inflation. But what is unique with the US is the fact that all the debt that the US is into is denominated in its own dollar, and the US can print dollar whenever it wants, so effectively the US will never have to pay back.
The United States can pay any debt it has because we can always print money to do that. So
the US can print dollar whenever it wants, so effectively the US will never have to pay back its debt, or even if it would have to, it can just print dollar and pay itself.